and welcome to the November 2024 Real Estate Market Update brought to you by the Reby Homes team. Let's kick things off with everyone's favorite topic, interest rates. Where are they headed and when will they come down? There are several factors that'll impact interest rates, including the labor market and inflation, and of course, consumer behavior following a presidential election. So let's start with the jobs report. Two areas saw significant job growth in the latest report from November 1st, healthcare and government. But as for the rest of the labor market, it's seen a stagnant or even declining trend, which is unlike what we've seen in the past. Inflation is stabilizing, although it's not quite to the 2% range that the Fed is aiming for. They are seeing the trend that they want to see. They definitely don't want to see it tick back up, however, so they're likely going to tread lightly and move slowly when it comes to rate cuts. That doesn't mean we aren't expecting one or more rate cuts, it just means we're not sure when or how much. Fannie Mae, MBA, Wells Fargo, and NAR are all projecting that mortgage rates will decline in 2025, which is great news for those buyers who are struggling right now. But one thing that's important to note is that 70% of buyers abandoned their home search this year due to rates being too high. They took a back seat because it got too expensive and they've decided to wait for rates to come down. Why is this important to note? Well, it means that 70% will likely be encouraged to re-enter the market when rates do come down, along with those who are already waiting for rates to come down. And that swarm in demand, as we've seen in the past, will have an impact on prices. So what would it take for prices to come down? We all know the saying, what goes up must come down. Well, let's take a look at why prices went up the way they did in the first place. This graph goes all the way back to the 70s and shows trends in new home builds. The 70s, 80s, and 90s, we saw far more homes being built than we've seen in the last 15 years. So over the last decade, we've been underperforming in terms of keeping supply up with demand. Fast forward to 2020, rates hit their lowest point historically, and in comes more buyer demand than we've ever seen. Couple that with the already slim inventory we were facing, and you get insane appreciation. Of course, price corrections can be observed in certain markets across the country, but corrections shouldn't be confused with a crash. Price reductions happen in every market, some more than others, but 15 to 20% depreciation is a completely different story. Now let's take a look at consumer debt across the country. This graph highlights the amount of mortgage debt that exists, and that number is sitting around $13 trillion. That's a huge number and a huge factor in the belief that a housing crash is upon us. However, we have to paint the full picture. While there's $13 trillion in mortgage debt, there's $35 trillion in equity, and the total value of real estate in this country is $48 trillion. If you look at that picture, you'd say that's a pretty damn good investment in terms of debt to value. Back in 2008, mortgage debt exceeded equity. Many Americans owed more on their home than it was worth, which is where the term strategic default came into play. Today, we don't have strategic default. We have very real demand and very significant equity in value. So for those thinking a crash is imminent, we'd encourage you to take a closer look at the data and take into account all factors involved in a housing crash. You'll notice there's nothing to support it. Collectively, majority of the expert financial institutions agree that we'll finish out 2024 with an average appreciation rate of 2.5%. Slow, steady, and boring, but positive. Those who bought in the last 3 years may want to consider hanging on to their property a little while longer, while those who purchased 4 or more years ago are probably in a pretty good position with some equity. As for inventory, we're still below average across the country by roughly 300,000 units. However, more homes are coming to the market. And that's been a consistent pattern for the last 12 months, which is promising as we head into 2025. Sales volume is also expected to increase in 2025. 2023 and 2024 had record low sales due to numerous factors, but heightened prices followed by steady high interest rates certainly didn't help. With rates finally expected to come down next year and inventory increasing, activity is expected to increase as well. Overall, as 2024 comes to an end, we can look back and say it's been an incredibly slow, expensive, and boring real estate market, but we're starting to see the light at the end of the tunnel and things are definitely looking up. Now for a look at our local market here in the Phoenix metro area. If you've been keeping up with the Arizona real estate market over the last 2 years, then you know that there hasn't been much going on. Our market has remained fairly stagnant for the last 18 months with some fluctuations in rates, but nothing too crazy. As for the last 4 weeks of data, we've officially been pushed into a buyer's market. But don't be fooled. This is not the type of buyer's market where prices are going to start dramatically falling and sellers are willing to offer whatever it takes just to get an offer. We're barely over the balanced line. Nonetheless, this is a shift from what we've been seeing. Inventory is a large factor in our local market, so let's take a deeper look into that. From a broad perspective, it looks as if inventory is up from 2022 and 2023. However, if we look at single family homes alone, that's not the case. There are less single family homes available now than there were in November 2022, and condos have significantly increased over the last 2 years, which attributes to the overall inventory increase. Why is that? Well, a theory is that hikes in insurance, HOA assessments, and lender restrictions for condos have pushed sellers to ditch the condo and opt for a single family home or pocket the equity they do have and avoid the added and increasing costs of owning a condo. This is why current buyers may feel as if they still can't find a home despite there being more inventory than the last 2 years. Single family homes, especially homes in good condition that are well priced and in a desired location, are few and far between. The good news is they are increasing. While we're on the topic of single family homes, the median sales price for homes under 2,500 square feet has remained relatively flat since June of 2023, somewhere around $435,000. Similarly, price per square foot hasn't seen much movement since June of 2023, still in the $260 to $270 range for homes under 2,500 square feet. And we can see a great example here of a correction. That's the drop from May of 2022. It seems like a steep decline in appreciation, but certainly not a crash if we compare it to previous years. Days on market is back to the 70 range, although with the holidays coming up, we should expect that to increase by a week or two. All of these statistics have had little movement over the last 18 months, so it probably comes as no surprise that they aren't really looking any different right now. But what we can say is that nationally, we expect to see some changes in the market stemming from the very long-awaited rate cuts that will instill some confidence and motivation into buyers and hopefully nudge us out of this very long, very boring real estate market we've seen. We will leave you with this. Buyers markets historically last anywhere from 4 to 15 weeks before a shift takes place and we're back in a balanced market or we swing into a seller's market. So with that in mind, buyers, if you're waiting for rates to come down, you're not alone, and you might be waiting for a seller's market, which will not offer you the same opportunity like today. If you have the ability to buy in the next couple of months but just don't love the payment, we'd encourage you to consider it anyway before buyer demand comes in hot and drives prices and competition up. As always, we're here to answer any of your questions, real estate related or not, or show you data in your specific area, so please don't hesitate to reach out. We're happy to help. Thank you so much for tuning in, and we'll see you next month for the last market update of 2024.